Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Haitong Unitrust International Financial Leasing Co. Limited Annual Report. Haitong Unitrust International Financial Leasing Co. Limited offers a diverse range of financial services to various industries. The company provides operating leasing services, commercial factoring business, and advisory services. It also engages in aircraft leasing, financing of aircraft-related businesses, and PPP project management. In addition to these services, the company offers commercial and vehicle financing, as well as property management, logistics management, catering management, government outsourcing, and information consulting services. These services cater to various industries such as advanced manufacturing, urban utilities, energy and environmental protection, transportation and logistics, construction, culture and tourism, healthcare, and others. The company's extensive range of services is a testament to its commitment to providing comprehensive financial solutions to its clients. With its expertise in multiple sectors, Haitong Unitrust International Financial Leasing Co., Limited, has established itself as a leading player in the financial leasing industry in China. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline are multifaceted and influenced by various sectors. On the growth side, new business investments in emerging fields such as advanced manufacturing, technology innovation leasing, green leasing, and digital economy have contributed significantly to revenue expansion. Additionally, high-technology product exports have shown a 6.1% year-on-year increase, while integrated circuit manufacturing sector has experienced a remarkable 26.7% growth. The aircraft manufacturing sector has also seen a notable 24.8% year-on-year growth, and specialized electronic materials manufacturing sector has grown by 23.9%. Furthermore, the biopharmaceutical manufacturing sector has recorded a 12.1% year-on-year growth. On the other hand, revenue decline is attributed to finance lease income, which decreased by 23%, operating lease income, down by 14%, and service fee income, decreasing by 3.6%. The interest income from sale and leaseback arrangements increased by only 2.6%, a relatively small increase. Moreover, public-private partnership projects payables have decreased by 56.4% to RMB 53,306, and continuing involvement liabilities have dropped by 100% to RMB 0. These factors collectively contribute to the overall revenue growth or decline in various sectors. The net income of a company underwent significant fluctuations between 2023 and 2025. Initially, it increased by 6% from $1,607.5 million in 2023 to $1,707.8 million in 2024. However, this growth was short-lived, as the net income decreased by 11% to $1,424.8 million in 2025. The profit margins of the company also experienced changes during this period. The net profit margin saw an increase from 19.11% in 2023 to 21.19% in 2024, indicating a positive trend. On the other hand, the profit margin before tax and provision showed a decline from 43.96% in 2023 to 48.83% in 2024, suggesting a decrease in profitability. The company's financial performance indicates a strong ability to generate positive operating cash flow. This is evident from multiple sources throughout the report, including page 21 and page 38, which explicitly state that the operating cash flow status is positive. Furthermore, pages 40 and 147 confirm this trend, emphasizing the company's success in generating positive operating cash flow. The data provided on pages 57 and 243 also support this conclusion, showing significant net cash generated from operating activities in both 2024 and 2025. Specifically, page 243 reports a net operating cash inflow of $21,476,355, while page 244 shows an operating cash flow of $22,283,240. These figures demonstrate the company's ability to generate substantial positive cash flows from its operations. Overall, the evidence suggests that the company is indeed generating positive operating cash flow, indicating a healthy financial position and strong operational performance. The company's debt level has undergone significant fluctuations over the past year. While there are varying reports of decreases and increases, a closer look at the data reveals that total debt levels have remained relatively stable, with only minor variations between 2024 and 2025. For instance, page 38 notes that total debt level has not changed significantly, with a slight decrease from RMB 39,895,805 in 2024 to RMB 39,273,084 in 2025. However, other reports suggest otherwise. Page 230 indicates that total debt borrowings plus bonds payable decreased from RMB 39,379,390 to RMB 35,528,499 RMB. Additionally, page 219 notes that bank borrowings and bonds payable have both decreased by significant amounts in 2025 compared to 2024. Regarding interest expenses, the data is more consistent. Interest expenses have decreased significantly over the past year, with a notable 20% decrease from RMB 3,056.8 million to RMB 2,446.2 million in 2025 compared to 2024, as reported on pages 30 and 36. This decrease is also reflected in page 37, which notes that interest expenses on bank and other borrowings decreased by 20.2%, while interest expenses on bonds payable decreased by 19.7%. Management's outlook on the company's strategy remains focused on serving the real economy, deepening industrial transformation, and upgrading customer hierarchy. The company will continue to adhere to its core mission of serving the real economy while strengthening risk prevention and control. In line with China's development strategies, the company will focus on emerging industries, aligning itself with the strategic direction of 5 major sectors of finance. Management is expanding into customized and high-end healthcare services, providing financial leasing and other services to hospitals and medical institutions. The regulatory environment remains stringent, but provides strong support for the industry's high-quality development. The company has a sound risk management structure in place to meet business development needs, focusing on serving the real economy with financial services. Management is seizing market opportunities in emerging industries such as high-end equipment manufacturing, next-generation information technology, new energy, and new materials. The company will continue to serve the real economy and support the development of new quality productive forces, advancing the 5 major sectors of finance and cultivating emerging industries. The global economic recovery will face headwinds in 2026, but China's economy will maintain growth through high-quality development. The group will focus on key sectors such as new energy and technology innovation. The company's financial performance is marked by a commitment to shareholder value. One notable aspect of this commitment is the payment of dividends, which demonstrates the company's confidence in its ability to generate consistent returns. According to the provided information, the company has paid out a total amount of RMB 675 million through 2 cash dividend distributions. This decision to pay dividends suggests that the company is prioritizing shareholder value and rewarding investors for their loyalty. The payment of dividends can also be seen as a sign of financial stability, as it indicates that the company has generated sufficient profits to distribute to its shareholders. Overall, the payment of dividends by the company reflects its focus on delivering value to its stakeholders. That concludes the financial summary for Haitong Unitrust International Financial Leasing Co. Limited. Feel free to comment below, and I will be happy to answer them when possible.